Hello dear traders, I'm Maria Starodop and this is the review of crypto analytics from fx.co. It's the 13th of December today, Wednesday, and in our today's review, how will inflation report affect Bitcoin, and why does technical analysis take a backseat these days? And we have an article today by Artem Petrenko. So Bitcoin started the new trading week with a significant drop to the local support zone near the 41,000 level. By the end of Monday, the cryptocurrency managed to stabilize near this support area, but no recovery of codes occurred. And cryptocurrency market volatility has significantly decreased ahead of the release of key macroeconomic indicators such as inflation data and the Fed's decision on interest rates. Despite overall positive macro indicators, there is no reason to believe that Bitcoin will show substantial increase in quotes after the data is published, according to investor expectations. The Bitcoin market remains overheated still, and therefore traders' reaction may be unpredictable, even with positive developments. The asset may either resume the uptrend and reach 45,000 level, or undergo a retest of the 40,000 level. Therefore, a detailed analysis of the situation is crucial before trading the news. So let's discuss what's the fundamental background. Contrary to our expectations of an increase in unemployment in November, the main report showed a decrease from 3.9 to 3.7%. Meanwhile, the wage index accelerated to 0.4%, surpassing forecast of 0.3%. This data came as a surprise to analysts who anticipated more positive results, leading to disappointment and selling in the market. By the end of trading day on December 8, traders adjusted their inflation expectations to a level of 3.1%, lower than the October figure of 3.2%. This led to painful market reaction as the US dollar index rose to 104 points, affecting the value of investment assets, including Bitcoin, which fell to 40,700 a few days later. Therefore, if the indicator turns out to be at or above forecasts, further declines in the value of Bitcoin and other risk assets should be expected. Moreover, Fed meeting is approaching, and the Fed Chair Jerome Powell stated that the Fed would make decisions based on incoming data, and there is hypothetical possibility of raising rates on December meeting. However, according to FedWatch tool, 98.4% of traders expect the current rate to be maintained regardless of inflation data. In such a situation, it's essential to pay attention to Powell's statements after the meeting, where a potential policy adjustment based on updated data will be announced. Also, it's worth noting that the key players of US financial markets, such as Goldman Sachs, are extremely optimistic about Fed's monetary policy, and they believe that the regulator will implement 2 rate cuts in next year, and optimistic expectations about this are already filling the market. Considering the significant increase in consumption levels in the US in November, inflation may rise, potentially triggering a sharply negative investor reaction, including in the cryptocurrency market. So what's happening technically? Let's have a look at the chart. As the crypto market is expected to experience a significant increase in volatility over the next 2 days, technical analysis takes a back seat, Artem warns. The primary tool for the price action in this scenario will be pending orders outside the main fluctuation range, which is within 40,500, 42,500. And beyond this zone, where traders should catch movement using pending orders. Considering more fundamental analysis, it's worth noting the clear formation of a trend reversal pattern, the double top, which we can see on the chart. The neckline around the 42,800 mark was successfully breached, providing grounds to anticipate a local trend change in Bitcoin. And it's also possible that the price will resume its upward movement to form a third peak, but in such a case, a retest of 42,800 level will be needed, as the current pattern will lose its relevance. So, making a conclusion, Artem says that inflation data and the Fed's decision on interest rates are the main macroeconomic factors influencing the price movement of Bitcoin. And market volatility is expected to increase significantly over these 2 days. So, relying on technical metrics and other aspects of technical analysis might be not so significant and sufficient, as the market will be subject to emotions. The probability of strong price movements is quite high, considering that crypto investor sentiments have reached a local peak, and therefore the likelihood of movement to $45,000 or $40,000 is quite significant. So the market will be extremely impulsive and subject to emotions. Okay, let's have a look at the charts for the moment. It's the 13th of December and Bitcoin opened today at the point 41,388, and now it is trading at 41,071. So since yesterday it declined some more, it's still in the same fluctuation range Artem mentioned. However, it approached its support level at $41,000, very close. And we should bear in mind that the market is subject to impulsive price movements, so we should be very, very much attentive and follow the news, of course. Well, this is all for today. We will see each other tomorrow in our next review. I wish you to have a nice day and profitable trading, and see you next time. Goodbye.